Hey guys, today's Thursday. Today we had no news. Tomorrow is a bank holiday, and yeah, just a quick trade breakdown. Once again, traded on paper trading today, and today was really difficult, I have to admit, but I learned a lot and yeah, really important lesson also. How I want to participate in difficult conditions. So what I mean by that is yeah, really just quick down, breaking down today's conditions. What I mean by that, then we go into the executions. Um, so right here basically on the daily chart, we can see we traded into the yeah, basically inverted gap right there, which basically gets used to push us higher. I trade back to CE, and now what's important to us is yesterday's daily high, and also kind of steady rejection block right there. Already to a hourly chart. Right here you can also see like the market maker buy model being in play. We have the external buy side liquidity, the daily buy side liquidity right there. We have important inefficiency right here, and also still the accordance of the rejection block. From that we can already drop to a 50-minute chart. Yeah, so what we can see right here is no session liquidity got swept on NQ, but if we drop lower on ES, we can definitely see that we swept London lows. So SMT being in play right here with the Europe open kill zone lows, and therefore yeah, we go back to NQ. We know this liquidity right here should be protected, and that's what we already saw today. We did not trade back to it, but yeah, that's also something I want to mention. So never attack. So that's once again what I really learned the hard way today. Once again, learned it a lot, I guess, not to attack S&T, so protected liquidity. The low right here, the new open kill zone says liquidity should not get swept. Why? Because the SMT right here is in play, and therefore it's unlikely the SMT right here basically protects the says liquidity that we're going to trade lower. That's the first thing I want to mention. So now back to regular trading hours. So what do we have today? So today, huge new range gap, 500 handles, and if we take a look, we can see we completely closed in Monday's new range gap. So trade to the downside here, so completely yeah, close in the gap. So we can expect that we are going to retrace from that and trade higher. Now we already opened up this high, and we already took out a lots of buy liquidity. So equal highs right here looks basically relatively equal. And we do have a new range gap, therefore we're going to see that we trade back to the upper quadrant level, or CE, as you know. And there where it's get difficult, because we can clearly see that we did not respect that the upper quadrant level right here first. So completely displaced lower. Still right here with the wicks we respected it and then traded higher, and now we are following our yeah, trend to the upside. And we did not trade back to CE. So back to NQ. So what was my thinking process today? What did I learn today? So what I really want to talk about is the fact that basically today is the reason why we cannot really say I will only trade after, that I trade after 9:35. That we have to wait for the 10 AM macro. So that's not always going to work out, unfortunately. So I think I definitely want to be more cautious if I buy, I think. So buying, I think, is most of the time more likely to appear with the 10 AM macro, but shorting, like this aggressive sell-off with the 9:30 opening, can happen right after the 9:30 opening if basically our manipulation is already done. Why can we expect a yeah, such a clean delivery to the downside already from here? And that's due to the fact that if we drop to a hourly chart, we can see, yeah, right here we scrapped the daily buy liquidity. We complete our higher time frame market maker buy model in that case. Therefore, we can expect a short-term retracement or a reversal, but at least a short-term retracement. That's really important. That's what I want to say. And then also, once again, we have a trending new range gap, and we are really apart from the so way just way higher than the upper quarter level. So We're also trading aligned with regular trading hours back to the upper quadrant level. We took also out regular trading hours by the liquidity right here, which is really equal in that case. So therefore, we are trading a line in that case with the higher time frame because we trade a retracement at least, and also we are trading a line with regular trading hours. The only thing I did not like in here is the fact that we're this early, so I did not take this trade. But we also took out New Open Kill Zone by the liquidity, and that's really clean. So I think what's more difficult with the trade right here is the fact that we also do have to look for the right targets. What I also really like about the trade is that we do not only have this busy right here, so buy side inefficiency, no, buy side imbalance, sell side inefficiency, so the fair gap to the upside, with which we basically broke through the daily buy side liquidity right here. But we also do have a really small bearish fair gap, and that's really important to me. Because with that we basically have the zussy reversal model. Where is it? I can't find it. Balance price range, that's where I want to find. And yeah, that's your high quality entry right here. But you can also, in my opinion, what's a bit more safer is to wait that we really close below the inverted fair gap, and then we enter right here and just aim for the liquidity right here for the opening prices. And yeah, once again back to and then we can also as you know, aim for the upper quadrant level, and that's if you take a quick look at it, basically right here. So back to electronic trading hours, we would definitely take at least a first partial right there, or at best also even full close our position right here, or probably at the high time frame, at the high of the higher time frame gap or midnight opening price, because once again the New Open Kill Zone says liquidity is protected. We do not expect that we completely sell off towards C already, and in that case over 100 handles, that's way more than enough. So yeah, we should not really aim for more than that right there. So that's the first thing I wanted to talk about. So, but I did not take this trade, and then it gets a bit more difficult. Why? Because back to electronic trading hours, now it's really hard to tell what we're going to do, because we, as you see right here, we refer to the 5-minute chart, yeah, disrespected the upper quarter level, but also did not trade back to CE. So now we are basically in between, and I think that's really important right here. If we are between the upper quadrant level and CE and we disrespected the upper quadrant level, it's already a difficult condition, a market condition to trade in, because you don't really know if you're going to slowly basically only retrace to the upside and then trade lower, or if you're really going to have some high resistance in here, respect the upper quadrant level, and then we are going to trade higher with the trend. So that's what we did today. So that's also really important, but yeah, that's something you should really be aware of. So therefore, also once again, I do not really like the trade right here. Why is it not good to go short right here? I mean, yes, you could say we scrapped engineered by the liquidity right here, we trade to the upside, we also trade into a 5-minute fair value gap, and from there we could eventually trade lower. So I'm referring to the wick right there, trade lower, and then basically target New Open Kill Zone says liquidity CE, which is at the low of the high time frame gap right there. But once again, yeah, we do see displacement, that's in that case good, but we are, so the best trades we want to take is always basically based off a external buy side liquidity or sells liquidity sweep. That's why this trade right here is also really good, and why we see this low resistance delivery. Once we take a trade based on internal internal liquidity sweep, it gets a bit more difficult. Then we have to be really aligned with regular trading hours with the high time frame. But in that case, if we drop already to the high time frame, we can see we have only this huge wick to the upside, and therefore we know a body will follow. This is not finished, this is unfinished business, and in that case we kind of trade against the high time frame trend, and therefore even if we would really say CE a good level, that is not a good trade, because we are trading not only based off internal liquidity, but we are also basically buying and shorting between the opening prices. So Already that is also indicating difficult conditions, seek and destroy, because we are trading a lot in between the opening prices. But yeah, that's why I don't really like the trade right here, because there's no clear structure. The low resistance liquidity run goes right here with the opening, and now we have high resistance. We already trade back to the midnight opening price a lot. We do now also respect on the 5-minute chart the upper quadrant level. We definitely see that we have high resistance to trade lower on the lower time frame. So that's definitely not a good short. Now we'll delete this one. Now, really important, 10 a.m. opens basically up right here and we trade higher. And the perfect trade, which is after basically taking the short right here, is the long right here. Because it's after we inverse the bearish fair gap right there. And more importantly, we also do have this really clean 5-minute fair value gap. So that's also really important in that case. And now, because we're also respecting the upper quadrant level, we are more likely to trade higher than lower. And once again, we also do have protected sales liquidity because of the SMT. So the market maker buy model is in play right here, and therefore we can trade higher. Why we do have so much high resistance in here is due to the fact that we already swept the objective for today. That's the daily buy liquidity. So actually, with 940, we could also be done, because if we basically miss out on the trade right here, we kind of see that everything was done already. I mean, we met the daily objective, and it's obvious that we are not really going to expand a lot lower, because we are trading against the higher time frame. So the higher time frame is still bullish. It's still a unfinished market maker buy model. And now on regular trading hours, we also do really have difficult conditions, being in between the upper quadrant level and CE, and yeah, therefore could also completely close our trading day right there. But still, I think the trade right here is really good, basically based on the 5-minute. Yeah, stop below basically the 5-minute gap, below the wick right here, which looks quite important, also below the inversion of the gap right there. We go long, and there you already see our difficult conditions, because we cannot trade higher. And once we trade high resistance liquidity, it's really important, I guess, that we do not go break even too early. Because as you saw, the 5-minute right here, and also the next candle, yeah, trade back into the 5-minute fair gap right there. That's our high resistance. When we see 5-minute retracement pullbacks on basically a lower time frame. Yeah, this would have been also a valid trade to take, but definitely a more difficult trade. And then we had once again, I think I want to delete this one right here. I will talk about it, but it's not really important. Then we have this really clean reversal right here. So we swept, in that case, once again now external buys liquidity. And what we see, once again, what we have right here, fair gap to the upside, where we took out the high, and then we have basically a fair gap, a bearish fair gap to the downside. So a balanced price range right here. And at best, we also do have a short-term high formation. That's what we have right here, but not right here. So that's also something to look for. So that's basically the zussy, I don't know how to call it, reversal model. But right here, you can see we do not really have the time. So to wait for a retracement, we close below C of the breaker, trade back to C and sell off. But why is it trade, or why does it fail to reach even lower, to reach back for CE? It's because once again, on the higher time frame, we are not bearish. So as you see, we still have this really hourly bullish body, and it's obvious that we trade in that case against the higher time frame. And once again, regular trading hours was respecting the upper quadrant level. If we would have traded lower, I think we would have already done it. In that case, that's only like a short-term run on stops. That's a stop run in that case. We eschew back to our 10 a.m. opening, and the quadrants of the wick right here perfectly trade back to CE. That's kind of a lower time frame 1-minute rejection block, and I think Powell could aim for something like that. He could trade something like that based on that, or eventually even aim. Yeah, he does not trade really SCT. But yeah, that's something Powell could trade. for me it's a bit too late in the day, because now we basically swapped external buy side liquidity twice. So daily buy side liquidity, AM session, now the high of the day, also external liquidity in that case. To once again aim for that is already a lot to expect, I guess. But yeah, that's why the shorts right here I took, because I wanted to be patient. I did not want to enter right here. I thought, yeah, being patient would be the best option, but in that case, it's actually not. Right here, the move is already lower. We only trade back into the 1 minute rejection block and trade higher from there. Yeah, got stopped and went short once again, got stopped, I guess, and went long, I think, and got stopped. Right here, the long with the non-close macro is not really good. Yes, I think we can expect that our higher time frame is trading slowly to the upside, but in that case, once again, we swapped already now 3 times external buy side liquidity, daily buy side liquidity, AM session now at the high of the day, also external liquidity, and then once again a new high of the day, once again also external buy side liquidity. So 3 times, and therefore this high right here, or to go long in here, is a lot to expect. So I think if you enter right here long, you should go already break even after reaching your buy side liquidity, probably, because if we do not already trade really higher from there, we don't want to participate in that. But yeah, that's basically what I wanted to say today. So definitely what I learned new is while we cannot always wait for the 10 AM macro, especially if you're going to short, and especially if with or before 9:30, 9:40, 9:30, so the opening, everything is already in place. So we already do swapped daily buy side liquidity. We have this really clean reversal, zussy reversal setup right here, and therefore we have to enter in here. That's the perfect trade, and then we are done trading. We do not attack protected SAS liquidity, really important. That's also already indicating that we are not going to trade a lot lower back to CE. And right here we do not really want to take trades based off a how to call it, internal liquidity sweep. That's also really important, I guess. And if we do trade high resistance, what we probably should not do, because we should already be done after 9:40. So right here, our low resistance liquidity run already occurred. But if we find ourselves stuck in high resistance, I mean, that's basically for trading in general, you have to keep a wider stop. You have to stay or give the trade a bit more room. You should not really go break even right on. So that's why the trade right here could have failed if you go too early break even. But I think that's the second trade, which is also valid. But after that, after we swapped now external buy side liquidity twice, we should definitely not take any trades. I mean, yes, we definitely traded clean back to the 10 AM open, to a rejection block right here. And it's probably also going to work out. And I think also the fur gap right here, where we trade perfectly back to CE, is also really clean. But yeah, still, I don't know. I think that's a bit more difficult, really late in the trade, and also, yeah, not really probably my approach. It's something Powell would probably look for. Yeah, but that's basically it. So we will not show you the execution video today, because then the video would be too long, and I think there's not really much to learn from today. So basically already mentioned everything, and yeah, that's it. Safe trading, and see you soon.